morning, Mark Soderberg with ADM Investor Services with the morning ag market outlook for Thursday, July 3rd. Much of the ag space is higher here this morning, showing follow through from yesterday's price surge. Corn right now 4 to 5 better. Wheat prices steady to about 3 higher. Soybeans are 8 to 9 better, just punching in the new session highs. Meal prices are up about $3 following yesterday's key reversal day, while bean oil is down about 20 points. Yesterday's price surge was largely triggered by speculative buying and hopes that President Trump would announce some progress on trade negotiations with China, hopefully ones that involve them buying U.S. agricultural goods. The president is scheduled to deliver a speech to rural America this evening in Des Moines, Iowa at 7:30. This on the eve of Independence Day. It could be a very choppy, very volatile trade on Sunday night. Yesterday, the Trump administration also announced a trade deal with Vietnam, which likely contributed to the bullish enthusiasm as well. Vietnam has, in recent years, bought most of their agricultural products from South American origin. Speculative traders, they were healthy buyers across the ag space yesterday, with the exception of meal, where they sold about 1,000 contracts. In corn, we had them buying almost 16,000, 7,000 in beans, 5,000 in both in oil and in wheat. Money managers are still a healthy short in corn. We've got it at about 165,000 contracts, and short a record amount of meal at 116,000. Open interest slightly higher across much of the ag space yesterday, an indication of new buying coming into the marketplace. I think that's most significant for corn, where I think early thoughts were it was a short covering rally. The CFTC Commitment of Traders report, usually out on Friday, will be delayed until Monday. Later this morning will be weekly export sales. Yesterday's EIA report showed ethanol production dipped to 316 million gallons, slightly below expectations, however, above the pace needed to hit the USDA corn usage estimate now for a fifth consecutive week. USDA production and WASDE data next Friday. The big beautiful bill appears to be on track to be on the House floor for vote later today, and on the president's desk for final passage by the 4th. U.S. jobs report also later this morning. U.S. weather remains mostly non-threatening as temperatures roll back to normal levels for the middle part of July, nearly ideal for corn pollination. Rains over the next 7 days to favor the northwest half of the U.S. Midwest, while the east is a little bit drier. Dry for much of South America over the next 7 days, favorable for corn harvest in both Argentina and in Brazil. Wheat areas of Argentina do have better prospects for rain in week 2 of the outlook. Look for an update from the Buenos Aires Grain Exchange later today. D's corn is nearing the 50-day moving average, near 441, with a 100-day moving average above that, just below 450. I think we'll likely need further evidence of a trade deal with China or a more threatening weather forecast to push above that 450 area. Resistance for November beans comes in near 1074, the high from June. I look for beans to continue to outperform corn until a little bit more is known about the late July and August weather. U.S. bean balance sheet could look considerably tighter if trendline yields are not reached this year, and if we can strike a trade deal with China. Market's opinion on U.S. winter wheat production just seems to be on the decline this week, starting off with the lower acreage data from Monday, and the outlook that crop conditions just fail to improve here. So we'll see. We'll have our production estimates for next Friday's USDA report early next week. Thanks for listening, everyone. I hope you have a wonderful Independence Day holiday.